Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of December 23rd, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. First off, Merry Christmas coming up this week, so hopefully you got your holiday shopping done. If we look at what happened this week or last week in mortgages, Delaware mortgage rates did surge higher last week after the Federal Reserve released their announcement about tapering their asset purchase program. If you look at the bond chart on the screen, you can see that giant red candle down on Thursday. That was after the minutes were released for the Federal Reserve meeting. Mortgage bonds sold off, opened and gapped lower on Thursday, but able to recover. That's why the candle's green. And then Friday, again, sold off again on Friday, but then we're able to recover. It looks like they're hammering out a bottom with the green candle on Friday. So long-term trend, as you can see for the arrow, is for mortgage bonds to move higher. We're looking at them to go 5% in 2013. But short-term trend, we do see bonds stabilizing. We may get a slight recovery short-term. So if you are not locked your rate yet, we do recommend starting the week floating your Delaware mortgage rate to see if it can recover somewhat. But longer term trend, if you're looking at new construction or you haven't got under contract yet, longer term trend, 5% rates 2014 as the Feds pull back on this asset purchase program and continue tapering. So let's dig into that Federal Reserve meeting this week. Started on Tuesday, released the minutes on Wednesday. Basically, in a surprise move, they announced that they were going to start tapering next month, January 2014. Currently, they're buying $85 billion worth of treasuries and mortgage bonds. They're cutting it by $10 billion a month to only purchase $75 billion. And then future tapering is going to happen. They're going to taper this down next year to zero. But they said they don't have a timeline on that. They're going to look at data dependent. So as the economy comes out, GDP, unemployment rate, jobless claims, that kind of stuff, new jobs, they'll determine if they're going to keep cutting at every meeting or postpone it. So $75 billion a month will be the new purchase program for QE3 starting January 2014. Now that's a big deal because if you look at the number of mortgage-backed securities that were purchased last month for November, 90% of them were bought through the Federal Reserve Asset Purchase Program. So as they taper back, they're the biggest player in the market. That's going to lose demand, so it's going to drive interest rates up. That's what we're saying. As they taper, rates are going to move up. If you think they're not, they're crazy. 90% of mortgage-backed securities purchased by the Feds last month. So as their demand wanes, you're going to have to raise the rates to get the private investors coming back into the market. Okay, in economic news, the final reading for gross domestic product, GDP, for third quarter of 2013 was reported at 4.1%, above expectation 3.6. It was also the highest reading since the fourth quarter GDP of 2011. So the rise in GDP was from a couple factors. First being increased consumer spending from 1.4% to 2%, and then build up in business inventory and business spending on software. So we'll have to see how this GDP plays out in first quarter of next year, because remember last year we had a good GDP fourth quarter, but first quarter of 2013 was bad, so we have to look what happens. Now, part of this build-up, two parts of it, business inventory and business spending on software, they're going to be gone. Inventory's built up, so that's done. And once you spend on software, you're not spending for a couple of years. So we're going to need something else to drive this GDP, or we're going to see it drop back down like we saw last year first quarter, and that would not be good for the economy. Then on Thursday, we saw the weekly initial jobless claims come out. Again, shocked us, came out higher at 379,000 claims. That was a 10,000 claim jump from the previous week, and they were only expecting 333,000 claims. We're actually expecting the initial jobless claim to go down. It actually went up. So that's not great news for the job market of recovering. So we'll have to watch that to see if this upward trend in unemployment claims continues, because that would definitely affect the job unemployment when it comes out. And then in the housing news, housing starts for November 2013 surged higher by 22.7% to 1.09 million units. That was above the expectations of 950,000 units. This was the largest percent increase since January 1990 and the biggest rate in 5 years. Then we saw building permits for November 2013. They actually declined by 3.1% to 1.007 million units, but it was still above the 950,000 estimates. They were estimating only 950,000 building permits. Came out higher, but we're still down. So, but all in all, that's definitely good news for new construction. Home builder sentiment is high as it's been. They're looking for a great 2014. So new construction is definitely booming. Then we saw that existing home sales for November 2013 fell 4.9% for the first time in 29 months to 4.9 million units, down from 4.96 million units in November 2012. So existing home sales slowing a bit, but still doing good. And then on the foreclosure front, CoreLogic reported that 791,000 more residential properties returned to positive equity in the third quarter of 2013. But there's still nearly 6.4 million residential properties still underwater with negative equity. So we're still down about 17% from the peaks of 2006, 2007 in terms of home prices. So we still got a ways to go. A lot of properties underwater, but we are going in the right direction. And then you can see by the number of foreclosures for October 2013, there were only 48,000 foreclosures compared to October 2012, which was 68,000. So that's a 30% decline. So that's definitely good news. Still got a long way to go in housing, but we're still on the right track. In the week ahead, we got personal income and spending on Monday, personal consumption expenditure on Monday, consumer sentiment on Monday. So those are reports we're going to be watching because they can move the market. And then big news on Tuesday. New home sales come out on Tuesday. And then Thursday, again, that weekly initial jobless claims. We're hoping we can see that number come back down and not keep going up. And in the local news, the next free first-time homebuyer seminar is in Dover, Delaware on January 11th. And at 2014, so that's the first one of the new year. That's from 10 a.m. to noon at the Holiday Inn in Dover, right on Route 13. And then the next one in Newark, that is January 18th. That's Saturday from 10 a.m. to noon, and that's at the Christiana Hilton Hotel in Newark, Delaware. You can register for either one of those events, but give us a call in the office at 302-703-0727 or online, www.delawarehomebuyerseminar.com. If you need a quick, free, fast pre-approval, give me a call, 302-703-0727, or apply online, pyramiddelaware.com. Look forward to seeing you guys next week.